Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down a little bit, about 0.7% here, as you can see on the S&P. I think the Russell is up a little bit. Let's check real quick. Yeah, so the Russell 2000, I think that's the only index today, is showing green today. So on the Russell 2000 is about 0.2% positive. But let's focus on the S&P as we always do on a daily basis here. I actually think S&P 500 is kind of a golden index to, to gauge the overall market. And everybody got a different opinion on it. Some people think it's the NASDAQ. Some people think it's something else, but I think it's the S&P. S&P usually always kind of stays in the middle. Usually NASDAQ always tend to get a little bit hyped up, and then Russell, the small caps, usually tends to lag, and the diamond is kind of sandwiched between. But it's the S&P usually right in the middle. So I always and in my opinion, I think S&P 500 respects the technical levels the most compared to all other indices, and it's just my own opinion. So I really love to gauge the S&P and kind of base my trades, entries and things like that based on S&P 500, because I have to understand where the market is going as a whole, and then based upon that data, then I can able to place a trade, exit, or put on a hedge, take some off or add more, and all of that kind of comes from first analyzing the S&P 500 and what I think the S&P 500 is going to do. Because usually, if the broad market is up, then the stocks are, majority of stocks, not all stocks, the majority of stocks are going to follow. So anyway, let's look at the S&P 500 here. Looking at the 65-minute chart, we always do. I don't know what happened. All of a sudden, like, the title got super long. Now it's S&P 500 ETF Trust Unit Depository Receipt. Anyway, so that's a 65-minute chart there. I wonder if I can somehow I can remove that title. I'll figure out later on my chart, see if I can remove that title. But anyway, so looking at last 6 hours of trading, obviously is 60.5 hours. It's actually 6 hours and a half. This is the reason why I use 65-minute chart. Some people have asked me that before. Why do you use 65-minute chart instead of hourly chart? Well, because there are 6.5 hours in trading, like 6 hours and a half. So the last candle is going to consist of 30 minutes worth of data if you're just doing an hourly chart, right? So if you change that into 65-minute chart, what happened is each candle is going to be well proportioned into 65-minute chart, so that there is going to be no candles with less a minute, right? So if I turn that here, let's do a little experiment, see what it looks like. So this is the first 65-minute, second, third, 4, 5, 6, right? So if we do just hourly, like 60-minute there, so what happens is now it looks slightly different. So you can see some of the candlesticks a little different. That is, I'm pretty sure that's consist of, is it first hour? Okay, so that's okay. So that's 8:30, right, for Central Time, and then 9:30, 10:30, 11:30, 12:30, 1:30, 3:30. Yeah, so this candle only represents 30-minute worth of data. So this right here, that's only 30-minute compared to some other guys. These guys are 1 hour worth. So we got 1, 2, 3, 4, 5. No. We got 1, 2, 3, 4, 5, 6, 7 candles. So there are 7 candles in 6 hour, 6.5 hour trading. So that's hourly. So if we go to 65-minute, you can see it's different. It gives you just a little bit different vibe to it, doesn't it? Again, that's 65-minute chart right here, right? That's 8:30, yeah, 8:30. So that's 8:30, 9:35, 10:40, 11:45, 12:50. So each candle is well proportioned, right? That's what it looks like on the 65-minute. And then if we go to 60-minute, you know what, Miles, I'm going to title this video, Why I Use 65-minute chart. Because I already spent, like, these videos are like 10 minutes, and like I already spent like 6 minutes here looking at this, just looking at candles. And that's hourly. So do you see the difference? It has a certain different vibe. And for long-term investors and things like that, it really doesn't matter. Like, you know what I mean? But I like to make everything like, you know, with precision. So that's not precise when you're trying to analyze, you know, in the short term, that when the candles look like this. So that's the little trick there that you can do. Definitely has a different vibe. Definitely a different vibe. It wouldn't be a huge deal for any longer term trader, but when you're trying to analyze at least what happened today, it definitely gives you a different vibe. So that's why I do 65-minute chart there. So I already spent like 80% of our time together just showing you that. But I mean, there aren't a whole lot to talk about today. What I didn't say yesterday is we're down a little bit, 0.69%, but we're pretty much same there. So let's kind of zoom out a little bit. We just been hanging around. So that was the first hour. Second hour, we pulled back. And I think at one point what happened was there was pretty decent sell-off this is the first hour, and the second hour, and then the second hour it really pushed it down, because remember, this was a gap area, and this was support, this was a pivot. So it was a good thing that bears break below that short-term pivot, and then really brought it down, trying to attempt to fill this entirety of this gap. And, I tweeted it out today on my Twitter account and StockTwits that it'll be better for the bears to come, down and fill this gap, the entirety of it, not leave some behind, but entirety of it. And I also said for the buyers, though, for the bulls, they want to defend it. They want to defend it and make sure bears don't come down and fill it all the way down. So it looks like, so you're definitely looking at 65-minute chart, we can see that pressure, don't we? Like it looked a little bit different when you looked at hourly chart, but when we looked at 65-minute chart, definitely we saw that bulls protected this level. And in this process, you see that short-term, micro-term moving average there, that light green, blue type of squiggly line. We were able to stay above it. And pretty much after that, we held above that moving average all day. And once bulls, and basically bulls are making sure bears not going any lower, at least for today. So bears not able to filling this gap, the entirety of this gap that happened yesterday morning, but came to fill almost half, it looks like halfway. That in itself is bullish in the short term. So what bears need to do, bears need to try to continue in this micro term downtrend, trying to bring it down tomorrow and trying to come and fill this gap. What buyers need to do, maybe take advantage of this situation, in this grindy situation, maybe trying to bring it up. Bears also going to argue that this potentially be that bearish pennant pattern or bearish flagging pattern of some kind. You don't really know until which way it breaks. It could actually break out on either direction. I mean, think about just a couple days ago where bulls brought it up and looked like it was a bull flag also, but you can see it broke to the downside, at least for that day. That's why I don't go by that. So these consolidations could break on either direction, right? Bears want to break it down and fill this entirety of that gap. Bulls want to break higher and then trying to take out the 297.65 level here. Let's go kind of zoom out here real quick. So if I zoom out, let's look at the longer term of things. It's been just grinding so much that I think doing midterm analysis is because we're still looking at things more of a midterm perspective. We're still in this grindy, choppy, lethargic type of environment. It's been a lot of gap ups and gap downs, and the majority of the move that buyers have made has been a gap up that happened this week. And late last week we saw some buying activities that have occurred, and that was an important move, which we talked about last week. But anyway, so looking at the longer term picture here, and you can see all these moving averages still rising. We talked about that that midterm moving average, that blue dotted moving average, that's still rising as of today. Let's look at actually oscillator. I think that's more important. So the oscillator has been curling down quite a bit. We're not seeing any kind of bounce on this oscillator. Looks like usually when it gets to overbought sentiment here, let's go back and look at these levels there. We're going to try to analyze this vicinity here. So usually what happens is after that get into that overbought level, we get a little pullbacks, as you can see here, and then there's kind of another up move, right? There's another up move. There's another up move. But this time it looks like we're just kind of falling over, which looks similar to back in here, March 30th. So we are at that level right now, right? So obviously we may see a little bounce in that vicinity. Looking at March 30th action, obviously bears don't want to see any kind of bounce, but maybe they have to give up a little bounce, because you can see back in March 27th we saw initial bounce right there, and we made a higher high. And so let's focus on this right here, because I think that's important, because you can see we have similar price action going on right now. So let's focus on that, right? So what's going on is maybe what bears need to do is let buyers have their bounce. In that vicinity, in that process, you can see there's a slight higher high there. And then the oscillator made what? Lower high. That's a bearish divergence. So maybe what bears need to do is let bulls have their bounce. And I'm not saying that's exactly what's going to happen, but if we do see a bounce, potentially that's how what is playing out, where we see a bounce, make slight higher high, and then the price fall, and then the oscillator fall, but oscillator does not go all the way up, but makes lower high. So price makes higher high, oscillator makes lower high. We get into a bearish divergence, and then potentially the oscillator goes all the way back down to oversold level, and that's when maybe the bears can have their pullback at that time. So that's the scenario, I think. So obviously, because I think what's happening is we're just been hanging around a little bit. Because a lot of times when just looking at, just this choppy environment that we've been in the last couple months here, every time it seems like when there's kind of a sideways grinding move that occurs in the market, it seems to be then there's kind of the, even here, back in May 6th, we saw grinding move. Next day, we did see a decline, but got back up there. We saw this right here, kind of sideways grindy move. We saw a little bit of sideways grindy move here. Let's see. We saw sideways grindy move. Sideways grindy move. Even here, sideways grindy move. Next day, we saw a pop, right? Sideways grindy move. This time didn't work. We saw sideways grindy move. This time we gapped down. But overall, you can see every time when we see a sideways grindy move, it tends to gap back up either next day or day after. And then the price seems to make higher high. I think that makes sense, because if we do see a bounce to the upside and then, price goes maybe 300. I mean, 300 is very, very prominent, conspicuous number. I mean, everybody's gonna remember 300 is 300. So people are gonna probably recognize that when you get to about 300, and that in itself is gonna be a psychological resistance. And then potentially at that time, people are taking profits, some people are shorting, potentially this thing falls, and then that's when we see that bearish divergence we just talked about. That could be a scenario. So again, you let bulls hang around here. That's short-term bullish. Bears did not able to fill this entire gap. That's a bullish. The short-term support or short-term moving average, we held it here, and we holding it last several hours. That's short-term bullish. So we have a short-term bullish momentum with the micro-term bearish pressure just in last day or two. And with the steam is, the oscillator steam is favoring to the downside. But a lot of times, again, we just explain. I'm just recapping now before I let you guys go. I just explained it earlier that when that happens, sometimes there could be another oomph of a bullish move and makes makes new highs in price, and then you form the bearish divergence before finally this thing rolling over to the oversold sentiment. So let's see. Tomorrow's Friday, right? So tomorrow's Friday. So I'll come back to you tomorrow in the market update video. We'll do more extensive analysis. I'll look at a few indices, look at some of my current holdings, the stocks, and we'll look at Bitcoin and gold and things like that. So tomorrow, I'll come back for you. Now I'll do a little quick update on the 65-minute chart S&P, and just to follow up with you guys. So you guys have a wonderful evening, and good luck trading tomorrow.